History of Japanese Candlestick Analysis. If you are trading or thinking of getting into trading, technical analysis is a very important part of the process. Without looking into technical analysis and understanding technical analysis, it would be very difficult to be profitable in your trading sessions. Technical analysis is made up of a whole load of tools, including analyzing charts of the movement of price of a given instrument over a period of time. Using these charts to predict the future price of that instrument is what technical analysis is all about. There are various methods of representing the price and time data on these charts, such as lines, bars, etc. But a new method called the Candlesticks charting based on a Japanese system. One of the first people known to have used candlestick to predict future price movement was a Japanese rice trader, Munehisa Homa. The Japanese candlestick was later introduced to the Western world by Steve Nissen. Steve researched, studied, lived, breathed, ate candlesticks, and began to write about it. Slowly, this secret technique grew in popularity in the 90s. Without Steve Nissen, candlestick charts might have remained a buried secret, to make a long story short. Just like a bar chart, a daily candlestick shows the market's open, high, low, and close price for the day. The candlestick has a wide part, which is called the real body. Traders can alter these colors in their trading platforms. I'm going to admit something right off the bat. Japanese candlestick isn't the most interesting and exciting thing in the world. In fact, it's a bit boring on its own. But if you want to become a successful trader, understanding the candlestick pattern and formations is essential. Benefits of using candlesticks. Candlestick charts are one of the most widely used tools by technical traders to analyze the chart. Most traders prefer to use a candlestick chart because, number one, it can help to determine the current state of the market at a glance. By looking at the color and length of a candlestick, traders can instantly determine if the market is gaining more momentum or losing momentum. Number two, traders can easily see the direction of the market. Number three, candlestick charts display specific bullish and bearish reversal patterns that cannot be seen on other charts. Number four, easy to understand, candlestick charts are aesthetically pleasing to look at on a screen, and with customizable colors and outlines available on most charting platforms. Any user can make candlestick charts look however they please. Number five, indicators. Most indicators work best with candlestick charts. If indicators are relevant to a particular trading system, often candlestick charts are required. Number six, sentiment and market psychology. Candlestick charts are great for displaying who is in control of a market, or market sentiment over a given time frame. Through various candlestick patterns and formations, such as the Doji patterns, etc., a trader can assess what the overall bias may be over a specific time horizon. Number seven, Japanese candlesticks are clear, simple, and easy to describe. This makes them easy to describe in code for the creation of trading algorithms which use technical analysis. Understanding candlestick structure. Just like a bar chart, a daily candlestick shows the market's open, high, low, and close price for the day. The candlestick has a wide part which is called the real body. When the real body is red, it means the session's closing price was lower than the opening price. If the real body is green, it means the session's closing price was higher than the opening price. The thin lines above and below the real body are called the shadows, representing the session's price extremes. The shadow above the real body is called the upper shadow. The peak of the upper shadow is the highest level the price had reached during that session. The shadow under the real body is known as the lower shadow. The bottom of the lower shadow is the lowest price of the session. If the candlestick has no upper shadow, it's said to have a shaved head. A missing lower shadow, on the other hand, is called a shaved bottom. If a candlestick has a short body positioned in the middle, that means a struggle between the bulls and the bears. Such a pattern is known as a spinning top. Sometimes a trader can stumble upon a candlestick where the real body is so short and it's almost impossible to see. It means that the price returned to its initial level throughout the session, and such a candlestick is called a doji.